Hi, and thanks for joining us for 5 things legislators should know about earned income tax credits. If you have low to moderate income working families in your district, chances are many of them are not claiming the federal earned income tax credit. 20% of eligible working families do not claim the EITC. This mini presentation is going to walk you through what EITCs are, how they work, and what state legislatures are doing to get the word out about EITCs. Lastly, we'll leave you with some things to consider when thinking about earned income tax credit policies. Let's start with some background. The EITC just celebrated its 40th anniversary with Saturday Night Live. The EITC was implemented as an anti-poverty policy and a work incentive back in 1975. And every year, it lifts 6 million people, half of them children, out of poverty. Now let's get to those 5 things you should know. The federal EITC is a refundable tax credit that reduces the tax burden for low to moderate income individuals and families. If the credit is larger than the amount owed, the difference is refunded to the taxpayer. Claimants have to meet 3 main criteria to qualify for EITC. Claimants have to have an income. They have to meet income limits set by the IRS every year. And they have to file a proper tax return. Credits are larger for those with children, and claimants without children must be between the ages of 25 and 65 years old. They have to live in the United States for more than half the year, and they cannot be claimed as a dependent of another person. 25 states and DC have their own EITCs as of June 2014. Most states set their EITC as a percentage of the federal EITC. Most of them are refundable, and as you can see here, a few of them are not. Legislators are getting the word out about EITCs in a couple different ways. For example, in New Jersey, all employers are required by law to inform employees about federal and state EITCs if they're eligible for the credits. And the state also appropriated funds to tell those receiving unemployment about EITCs as well. Iowa has funded EITC outreach for roughly 10 years now, and in 2013 the General Assembly appropriated nearly $200,000 to EITC outreach and free tax preparation services. A little over 600 volunteers prepared taxes for almost 15,000 Iowans. These efforts resulted in $7.7 million in federal EITCs and almost $1.1 million in state EITCs were funded back to taxpayers. In Alabama, the legislature has funded the Save First program of Impact Alabama. This university-based program encourages their clients to save some of their tax refunds through their Save Now, Win Later initiative. For every $50 saved in a U.S. savings bond, the taxpayer's name goes into a drawing for a grand prize jackpot of $10,000. Nearly 600 student volunteers prepared taxes for over 8,000 families in 2014. Collectively, families claimed $14.9 million in federal tax refunds and saved $2.5 million. Legislators can also let their constituents know about free tax prep services offered in their state. Maybe the most popular program is the Volunteer Income Tax Assistance Program, better known as VITA, which trains and certifies people to complete tax returns specifically for those who are eligible for EITC. There are more than 4,000 VITA sites across the country, and you can bet that there are at least a couple of sites in your state. Constituents could also know about the Free File program. The IRS teams up with tax software companies to offer anyone who makes below $60,000 free online tax preparation services. And the neat thing about this program is that some states also have their own version of Free File to complete state tax returns online for free. There are some pros and cons to EITC policy, and let's start by talking about the pros. The EITC encourages low to moderate income individuals to work. And for those working parents receiving EITC, it can help loosen up money to pay for childcare, helping them maintain their jobs in the long run. EITC can boost the savings of working families to avoid future setbacks. And proponents also suggest that refundable EITCs pump new money into the economy. And talking about the cons, states have been rethinking their spending since the Great Recession. And over the last couple of years, some states have reduced their state EITCs. Also, just like with any other refundable tax credit, the government pays out more money than it collects in taxes when it offers a refundable EITC. Another concern is around the amount of overpayments due to error. A recent federal report estimates that the error rate in issuing the EITC was between 22 and 26% in fiscal year 2013. In dollars and cents, that's between $13.3 and $15.6 billion. The most common errors are around reporting income and the number of qualifying children. You might ask, how many of these overpayments are due to fraudulent claims? At this time, there's no research out to point out how many of these overpayments are due to fraudulent claims. If you want a deeper dive into EITCs, please visit our website and read our full report. That site is www.ncsl.org/workingfamilies. Thanks for listening to this mini presentation on 5 things legislators should know about earned income tax credits. Don't forget to share this video with a peer.